Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, November the 4th. The year's 2019. Let's talk trading. First Principles Trading Part 1. Last week I promised you that I was going to talk to you about First Principles Trading. But a couple things. I just got finished listening to a trading podcast, and the trader said something important. And I hope certain traders are listening and watching this video that I'm putting out today. They said that if you are not treating trading like a business, then you basically don't have any business trading. And there's traders out there that say, I got a job, and I don't really have the time, to sit in front of the screen all day or whatever. Well, I mean, that's like saying, I want to be healthy, I want to go to the gym, but I don't have the time. I'll buy the gym membership, but, I guess I want a miracle. It's like you got to put in the work. For those of you who are working a regular job, you can get up an hour or two earlier. Forex trading is open pretty much 24/5, right? 5 days a week, 24 hours a day. So that's no excuse. It's just that simple. If you really want to trade, you're just going to have to wake up earlier or stay up later or both to put some screen time in. It's funny though, the trader that made that business comment also said that, with their system, if you're spending more than 45 minutes a day in front of the screen, then you're doing something wrong. So it's just something to think about. I just wanted to put that out there. And the other thing is, traders, if you have trading questions, either post them in the comments on the YouTube channel, post them, out on Crestlick where I post my code, or post them on my Facebook page. That way, other traders can get the benefit of the Q&A. My emails are starting to fill, and I don't mind helping you guys out, but if I'm getting the same questions over and over from different traders, let's just put it out there in the public so everybody benefits from the Q&A. And finally, if you have questions, you send me the chart that you're looking at. You're having problems with indicators. You don't understand something. You have to show me what you're looking at. I can't read your mind. Okay? If you say it's an indicator, it's this indicator. Give me the exact name of the indicator. Is it TRO, underscore HL5? Is it, magnified marketing price underscore TRO modified? You got to tell me what you're looking at so I can help you. And finally, boys and girls, these videos are for educational purposes only, and your results may differ from mine, and that trading is very, very, very risky. You can lose all your money. And because of that, if you're looking for financial advice and guidance, seek it from an accredited financial professional. That way, when you lose your money, you got your advice from an accredited financial professional rather than somebody you stumbled across on the internet. Okay, all that's out of the way. First principles. What is a first principle? Well, I was reading this the last week when I decided, you know what, I need to do this for trading. But basically, first principles thinking is the act of boiling a process down to the fundamental parts that you know are true and building up from there. Okay, this is where it gets real interesting. What do we know is true when it comes to trading? There's a few things we know that are true, right? Okay, we'll look at a candle chart. And as you can see, I put 3 horizontal lines out there, 3 levels. What do we know are true? Well, we know yesterday's high price, that's not going to change. That is in stone. This high price from yesterday is set in stone, as well as the low price is set in stone. And today's open price, that first tick right there, that's the open price. Those lines are not going to move, okay? Doesn't matter if you're looking at a 1-minute chart, a monthly chart, daily chart, weekly chart. These are set in stone. So we know that's true. Since we know it's true, then we can measure from those lines. We can get distance that the current price is away from those lines. Now, what else do we know is true when it comes to trading? We know that price moves. We know that it moves in a range between from the open to the high or low, and then from the low to the high or high to the low, and then somewhere it closes, right? But we know price ranges. Some days it ranges a little, as in here. Some days it ranges a lot, but we know it ranges. And we can take the average range. We can take the average true range, which is a slightly different calculation. We can take a frequency distribution of the ranges to see where it ranges the most versus where it ranges the least. Now, what's that got to do with anything? Well, this goes back to some of the fundamental first principles of trading. Price is either going to break out of one end of the previous candle, the other end, both ends, or it's not going to break out at all. When it doesn't break out, we call that an inside bar. When it breaks out of both ends, we call it an outside bar. And when it breaks out on one end, I don't think we call it anything. But as you can see here, clearly today, price opened, it broke out of the previous day's high, and it's up 26 pips. First principles, things we know are true. Now, what you can do with just those few first principles, you can just take these trades at the line in the direction price is moving. Will it be profitable each and every time? No. I mean, right here is a perfect example. Right there. It broke it. Maybe you jumped in and then it started going against you, and hopefully you hit your stop loss. Now you were probably wondering how I was going to segue into that. The risk and money management, okay? That's really a big part of trading, because we know we can't control our win size. That's up to the market. Every win is luck. If you can't control it and it's a positive outcome, then you got lucky. That's my definition. If you don't like it, that's okay. It works for me. But on the other hand, you can control your loss size, barring unseen circumstances, events, black swan events, fat fingered trades. If you say, if price goes down 10 pips from my long entry, stop me out, 99.99% of the time you're going to get stopped out at minus 10. So you can control the downside. You just can't control the upside. Okay? And once again, you should never, ever lose more on any one particular trade than you're willing to lose. Okay? That's your risk amount. I beat that into the ground almost every day because it's that important. So back here, once again, first principles. Now, I set this up so you can look here at a weekly. And you can see you got the weekly, and you've got the weekly previous week's high low, and you've got the current week's open. And you can switch over to monthly, and you can see it's in the wick zone. Now, I've had traders ask me, well, what if the wicks are really big? Should I still take it? It's just like you're overanalyzing things. You know, here look at these big wicks. I mean, either price goes out of the wick zone or it doesn't. But the fact of the matter is, you can look and see price leaves the wick zones. Sometimes they close in the wick zone, sometimes they don't. More times than not, they don't close in the wick zone. Okay, even on the monthly, you can see it. I mean, here's one that closed in the wick zone, but most of the time they do not. It's just that simple. Okay, let's move on. For the week, we still have some pairs that haven't filled. I think yesterday, I think most of the New Zealand pairs hadn't filled, but you can see all but one's filled. And looking here at the weekly, you see we're still inside that candle body, and we still haven't filled that gap. Now, if you remember yesterday, I spoke about hitting the weekly pivot. Now, no, I'm not clairvoyant. No, I don't have a crystal ball. I just know what happens statistically, okay, which is based on the past. And you can see here on the daily, we're only 106 pips below the yearly open. We're 57 pips up for the month and 39 for the week and day. Now, once again, boys and girls, this is the first day of the month right here. And you see we broke out, which was shown on the other chart, but we were only talking about previous, but this was the first day of the month. And today, right here, this is the first day of the week. So we'll put in a new range. And you can see how close we are to the opening range for the year. And for the opens, you can see here, we blasted right through the June open. And as far, we blasted through the July opening high. Inside bar traders, this was the monthly inside bar high. Okay. And there's the monthly inside bar low in case you were wondering where it was. But you can see here, 11 pips up. Lots of inside bar trades here this week, sports fans, on the daily. And here again, we see we only got two pairs over 100 pips. There's the monthly H1 highest open so far. It might reverse. It may continue and make. It's probably going to make a new one in a half an hour. And you can see here we missed the pivot. We hit the buy zone, but since the pivot was within the buy zone and short zone, no bias. You got a trigger here, a second one here, and prices moved up in the buy zone. Once again, first principle, price ranges. So chances are price is going to move through one or both of these zones. And on the rat zone, you can see here, we put in some new highs on the rat zone. Red rats, look for a reversal. Now, I spoke that I would look maybe to trade long. Price is going to hit that pivot, but I also said let's look to see if it hits the weekly pivot. One was below, daily was below, weekly was above, monthly was below. Yep, but we already took out the monthly pivot. So once again, we took out that weekly pivot. I hope somebody profited off of that. So, fellow traders, I want you to really think about these first principles. It's really important, that which is true. Because one of the things, if you notice out there in Forex land, you're being marketed to all the time and they're hitting you at an emotional level. Just question whether or not it's true. So, as you're trading, remember, it's not what you trade, it's how you trade it. So, go out there and drain the banks.